Ladies and gentlemen, good evening. I'm Harvey Shapiro. I'd like to welcome you to the monthly public policy debates that are sponsored by the Smith Family Foundation. Tonight, appropriately enough, we are going to turn to tax policy in this country. I suspect many of you are deeply involved in completing your income taxes for the previous year, or like me, you have recently downloaded the extension forms and have given yourself another 6 months before facing up to this particularly unpleasant reality. Tonight we are going to be looking at tax policy in this country. This is a thorny, a vexing issue, dare I say a taxing issue for many people, regardless of their political views on other subjects. There are essentially two kinds of concerns that are associated with tax policy. One is simply the level of taxes, the amount that governments take in taxes. The other, however, is the question of structure. Just what is the most appropriate way to take taxes from individuals and other organizations. Many people believe that the tax system in this country is far too complicated. There have been a number of proposals for simplifying the tax system. Some of them turn out to be not very simple in their own right, but this is a continuing and an ongoing issue. And I'm very pleased to say we have with us tonight two experts on the subject of tax policy, tax simplification. Each of them is going to offer some of their own nostrums for simplifying the tax system and also share their views with us regarding the other proposals that are out there that have been floating around, that have been given serious consideration in some cases. Let me tell you who we will be hearing from tonight. Our first speaker will be Neal Boortz. He is a talk radio host. He's based in Atlanta and has been on the radio since about 1969. He's heard on about 200 stations around the country and has something on the order of 4 million listeners. He was trained as a lawyer and was a practicing lawyer for many years before he went onto the radio. He also is an author. His first book, entitled The Terrible Truth About Liberals, has about 6 printings and may give you a hint as to some of his political beliefs. He also co-authored the book, The Fair Tax Book, with Representative John Linder. That book reached the top of the New York Times bestseller list at a point in time. So he has been an outspoken advocate of tax simplification, and he will share his approach to that issue with us tonight. I'm pleased that we're also joined by Professor Michael Gratz, who's a professor at Yale Law School, where he teaches taxation and tax policy. In addition to having taught at not only Yale, but also Georgetown, the University of Virginia, Caltech, and Harvard, he has also served in government, having been worked in the office of the Assistant Secretary of the Treasury for Tax Policy at the end of the 60s and in the early 70s. He returned to Washington in the early 90s and serves as the Deputy Assistant Secretary for Tax Policy, and also served as an assistant and as a special counsel to the Secretary of the Treasury in 1992. He, too, has written widely. His books include Federal Income Taxation, Principles and Policies, and he's also testified before the President's Advisory Panel on Tax Reform. He has a number of interesting thoughts as to the ways one might simplify the tax system. I'm hoping he will share some of those with us tonight. Let me, however, first call on Neal Boortz.
No notes, folks. I'm flying without a net, and that terrible truth about liberals caused a few eyebrows to go dancing in here, didn't it? I woke up this morning, I went on the air to do my radio show, and it immediately occurred to me, as I was telling the listening audience, that I'm going to be in New York City tonight participating in this debate on tax policy, that I am completely and totally outclassed. I am a radio talk show host that'll spend one day talking about immigration reform, the next day talking about the hip-hop culture, and the next day after that talking about what's the worst practical joke you ever had played on you. And I'm here to discuss tax matter with a gentleman that was an Deputy Secretary of the Treasury for Tax Policy, and the question immediately comes to my mind, what in the world am I doing here? But we shall persevere. If there's one thing I can do, it's talk. I do 4.5 hours a day of it, and I've been doing it for, well, about 37 years. Now, April the 15th, your taxes are due a week from yesterday. I believe that's correct, since the 15th falls over a weekend. The average person in this room will probably spend more time preparing their taxes than the average American, but the average American is about 57 hours. 57 hours that you will never recover. I don't think that there's many people in this room that would like to see that tax preparation time, at least for the federal taxes, reduced to 0. I'd like to start out with this concept for you, if I might. Right now, we basically already have de facto a pure consumption tax in this country. All taxes are taxes on wealth, and all wealth is held by individuals. Corporations don't own wealth, their shareholders do. Businesses don't own wealth, their owners do. The one exception, if you want to really pick some nits with me, would be churches. Who owns that wealth? There you might have an argument. All taxes are taxes on wealth. All wealth is held by individuals. Every penny that the federal government of this country gets to fund its operations comes eventually from an individual who earned that dollar bill through investments or through labor, through muscle or through mind. Now, right now, this fact that we're all paying a consumption tax anyway is based on this. All of the taxes paid by corporations or businesses or providers of services are reflected eventually in the price of the goods that they sell or the services that they provide. And you pay that price at the cash register, whether it's somebody spreading pine straw, somebody filling a hole in your teeth, somebody selling you an automobile, somebody selling you office supplies. Now, I got interested in this idea of a consumption tax 25 years ago with a group called Citizens for an Alternative Tax System. Their idea was simply to replace the income tax, only the income tax, with a retail sales tax. Later on, they were supplanted by a group called Americans for Fair Taxation. I'm not going to go into the long details of how they happened. But through their auspices and about $20 million worth of research, they came up with an idea for the fair tax. Here's what it does. It replaces business and personal taxes, corporate income taxes, personal income taxes, the estate tax, Social Security taxes, Medicare taxes, gift taxes, capital gains taxes. They're all wiped out. They don't exist anymore. They're replaced by a one-time national retail sales tax on the sale of all goods and all services. How much would that sales tax be? Get ready to gasp. It'd be about 23% inclusive rate, an inclusive rate. Does that mean the price of goods and services would go up by 23%? No, because right now in those goods and services, everything you buy, the total tax load that went into producing that product or providing that service is reflected in the price of that service. Where or how much is that tax load? It can be anywhere from 19% to 26%, depending upon the product, depending upon the service. If you eliminate those taxes, the competitive pressures of the marketplace, then bring the price of these consumer goods down by the amount of the taxes that have disappeared. It is replaced by the fair tax, the national retail sales tax. So you have a $100 coffee maker that was carrying a 22% embedded tax, the total tax burden of all the people involved in bringing that coffee maker to you at the retail level. That 22% disappears, the 23% embedded tax shows up, you're still paying very close to $100 for that coffee maker. But on the receipt for the coffee maker, it will show coffee maker $77, fair tax $23. Now, let me cover a few more things. We're very interested in this country. Sometimes I'm a little bit confused as to why, with progressivity in the tax system. The more you make, not only the more you should pay, but the higher rate you should pay. One thing we all agree on, taxes should not be regressive. They should not attack and decimate the people at the lowest end of the income scale. Now, right now, those people in our country don't pay income taxes. They still have the payroll tax burden, largely offset by the earned income tax credit. But they don't pay income taxes. What's going to happen when they have to pay 23% inclusive tax on everything that they buy? It's going to hit them relatively hard. So the fair tax has, and I think this is the magic of the whole plan, what they call a prebate. It's a rebate, but it's paid ahead of time, so they came up with a clever word, prebate. And that is, every household in this country receives the prebate. And the prebate is a check every month equal to the amount of retail sales taxes you would be expected to pay on all goods and services up to the poverty level for your family. Now, I'm not going to throw numbers and figures at you, but let's just say arguably that you're a family of four. The poverty level is, I don't know, $24,000, $25,000. You divide that by 12. You're spending $2,000 a month in this country just to live to the poverty level. Figure out what the fair tax would be on $2,000 a month, about $460. And at the beginning of the month, your family receives either a check from the federal government or a debit to an account or a debit card for $460. So everybody, whether you're rich or whether you're poor, everybody lives federally tax-free right up to the poverty level. And it is a spending above the poverty level, which the government defines as what you need to spend on the basic necessities. It is the spending above the poverty level that is taxed at the retail point. There's many more things we could cover. I usually, in explaining the fair tax, go on for an hour or more. One thing I will tell you this. Businesses in this country, if we had the fair tax, if we removed all corporate and business income taxes, these businesses would be able to operate with no tax component on labor and no tax component on capital. Right now, businessmen, and I know there's many people in this room that fall into that category, every time they make a decision, they have to think about the tax consequences. They're trying to grow their business. What are the tax consequences? Trying to hire more people. What are the tax consequences? They want to make a change in product or a change in marketing. What are the tax consequences? If we had the fair tax, these businesses would make the decisions based on what's good for their employees, what's good for their shareholders, and what's good for the consumers. They would give no consideration whatsoever about what's good for the federal government because they don't pay any taxes. They're all the taxes are paid by consumers at the retail level. If that happens, America becomes the largest tax haven in the world, in the history of the world. Companies like Daimler Chrysler all of a sudden become Chrysler Daimler. They move back into this country where they can take advantage of the favorable tax system. Boards of directors of countries or companies all over the globe would be saying, what are we operating here for? Why are we opening a new plant, a new distribution center, a new research center here when we could open it in the United States? Open it in the United States and not have to worry about tax consequences. No tax component on labor, no tax component on capital. So America becomes a tax haven. We become a magnet for business, manufacturing, the service sector, everything, and the economy starts growing as a result. And one thing a lot of people would be glad to hear, you then have to hide behind your couch or under your bed to avoid bettering yourself with a job if you don't have one, or a better job if you already do have one. Now, this is a system, the first tax reform proposal I've ever heard of that was totally created by the private sector without any government involvement at all. And that may be its biggest problem, because it really takes a lot of power away from the elected class in Washington. No longer do they have a tax code they can manipulate for the benefit of campaign contributors. No longer do they have a tax code that they can manipulate for the benefit of hometown industries. And the lobbyist on K Street If this were to pass, we'd have to put them all on suicide watch. These people make $300,000, $400,000, $500,000 a year doing what? Manipulating the tax code for their clients. We have special tax breaks for specific manufacturers of ceiling fans. Under the fair tax, everybody pays the tax. Everybody gets the prebate every single month for the tax they pay up to the basic necessities, and businesses operate as businesses, not as tax-paying or tax-collecting entities for the federal government of the United States. It would be the largest transfer of power from government to the people in this country since the formation of this country. That makes the people very happy. It makes the politicians very nervous. And I am not keeping track of time. Over or under?
Over.
Over. I am very sorry. And but Professor Gratz will make up for it right now. Thank you.
Thank you. Gosh, it sounds good, but let's see what Professor Michael Gratz has to say about this and other proposals.
Thank you to the Smith Foundation, Family Foundation for having this, and to CUNY for hosting it, and to Neal for presenting this fabulous idea. I only wish it were true, or that I could believe it. I was advised by many people not to debate a talk radio host, because that's what they do for a living. And especially not on taxes, because tax reform turns out to be a difficult topic. It's a difficult topic no matter who you're talking to. And it involves economics, which has been properly labeled the dismal science. It involves accounting and mathematics, which are at least dreary, although they have no such label. And Frank Luntz, who's the advisor to Republican politicians throughout the country on how to talk about issues, tells Republican politicians never mention a number when you're talking about taxes. And as the WAG said, when you're explaining, you're losing. So I'm already losing. Let me start. I'm afraid I'm going to have to tell you some numbers, and I'm going to have to tell you some facts. And the worst thing is that in tax policy, the devil is truly in the details. There's lots of ways to hide facts deep in the statutory language. Many of us have seen it done many times. Revenue neutral tax reform, which is I think what we're talking about here. We want to be revenue neutral. We don't want to give a tax cut at this point in the guise of tax reform. Revenue neutral tax reform is difficult politically. Why is it difficult politically? It's difficult politically because it has both winners and losers. Now, nobody, including Neal Boortz, wants to tell you about the losers. They all want to tell you about the winners. But if it's going to be revenue neutral, somebody has to win and somebody has to lose if you're going to shift the tax burdens around. And that's why George Bush is no longer talking about tax reform. He had a panel he appointed last year. It studied the issue for 9 months. It presented several hundred pages of report, many ideas, and it's as if it never happened. And instead, he's talking about making his tax cuts permanent. Why is that? Tax cuts have only winners. Tax reform has losers and winners. But tax reform is essential. Neal and I agree on that. Our income tax is badly broken. We need to pay for the government spending we have instead of financing it through borrowing and shifting the tax burden to our children and our grandchildren, who ultimately will have to pay for the debt we're accumulating. And at some point, if we don't get serious about our budget problems, the nations that have been lending us the money to keep going are going to stop, fearing that we're going to inflate our ways out of this problem, and their dollar debt won't be worth what they put it into it. Now, the nation's economy is much stronger than it was in 2001 when George Bush began his tax cuts, but the federal government's financial situation is much weaker. In January of 2001, Alan Greenspan told the Congress that the budget surpluses were so great that if we didn't give a tax cut measure, the federal government would have to start buying up private assets like corporate stock and the like, something which he abhorred, and I do too. Well, the good news is that problem has been solved. We no longer have those deficits, those surpluses. We have deficits as far as the eye can see. Congress last month raised the debt limit to $9 trillion so that the government can continue to pay its bills without defaulting on its debt. And as the baby boomers retire and Medicare and Social Security and Medicaid, which pays for most long-term care for the elderly, grow, if anything, federal spending is going to grow rather than shrink, even if we manage to shrink it in many areas. And everyone, I think, agrees that that's the likely scenario. So we need a tax system for the 21st century that we can be confident will raise the money that we need to pay for what we're spending, that is more favorable to economic growth than the system we now have, and that is fair. That's why tax reform is essential. And we could both go on and fill our entire time with the failings of the income tax. It's too complicated, it costs too much to comply with, it's difficult and impossible for the IRS to administer, the Congress uses it like chicken soup, it's a cure-all for every ill that affects society. They give a tax break for this or a tax break for that. It depends now on where you roast your coffee, whether you pay a higher or lower tax rate. Starbucks wins, others lose. So the income tax, we agree, has got problems. Now, Neal Boortz in his book has other problems with the income tax that I don't have. The first is he hates withholding of taxes. There's a whole chapter about withholding of taxes. He says it would be much better off if the taxes were collected at the end of the year, that we all paid in a lump sum. To the contrary, I believe that withholding of taxes and information reporting about people's income is what has enabled us to collect the taxes that we have. And that if you eliminate withholding and you eliminate with information reporting so that banks would no longer tell you what dividends or interest you had, then the dishonest would take advantage of the honest. Only the honest would pay taxes. So I think withholding is a good idea. If you look at IRS data, non-compliance is high where there's no withholding or information reporting, and compliance is high where there is. Second, Mr. Boortz complains about the fact that the income tax is predominantly paid by high-income people. And it is, and this is very little understood, and I think you can either complain about it or not. 84% of income taxes are paid by people in the top 20% of income. More than half, nearly 59% of income taxes are now paid by the top 5% of income earners. And this is after the tax cuts of 2001 and 2003, and assuming they were made permanent. Now, although I would like to see lower tax rates to get the revenue, I'm not unhappy with this outcome because that's where the income is. The inequality of income and wealth in this country has been growing dramatically over the last several decades, and the rich have gotten richer while the middle class has struggled along. So I do not think that tax reform ought to be an occasion for reducing taxes on the very rich or the very well-off. We ought to keep them where they are. And I find it hard to believe that we can do that without keeping some tax on income somewhere in the system. Now, Mr. Boortz tells you that the sales tax will replace all of these taxes at a 23% rate, although he says, if you buy a toaster for $1, 23% is tax, 77% is not tax. Well, That's a 30% rate the way we understand sales taxes. You know, it's just a question of which way you look at it. If you have a gallon of gas that costs $3 without taxes and costs $3.90 with taxes, then that's a 23% tax rate on the $3.90, and it's a 30% tax rate, 90 cents on $3. I think we can all do that math. It's a 30% tax rate on the price of gas without it. And that's the way we think about sales tax. You go into a store and you buy something for $3, they add the sales tax. So I like to talk about it. You can talk about it however you want to. There's no right or wrong in that answer. But I like to talk about it as a 30% sales tax because that's the way I understand sales taxes. Now, according to the Treasury Department, replacing the income tax with the fair tax would reduce taxes on the top 5% of income holders by $87 billion, the top 1% by $81 billion, a tax cut averaging about $58,000 per family in the top. Now, the fair tax folks like to talk about how they're protecting the bottom through the prebate. But what they don't tell you is about the shift in taxes from the very highest income people, who have become more numerous and the income has become greater, to the middle income people who are going to have to make up the burden. It's not the low income people because they're protected through the rebate. So somebody has to make it up. So in the current situation, the question is, why do we all have to put up with the income tax? So I was called to Washington by Paul O'Neill, who was the Secretary of Treasury at the beginning of the Bush administration. And he said, let's see if we can come up with a tax reform that will simplify people's lives. And I worked with the Treasury revenue estimators because they're the ones who keep score on these matters, not the private sector. And we decided that for about a 15% sales tax, you could eliminate the income tax for over 150 million Americans. That you could have an exemption, a family allowance, an exemption, if you would rather call it that, of $100,000 per family. And you could impose a tax rate of no more than 20 or 25% on the income above that. And you could reduce payroll taxes for the bottom part of the income groups in order to keep them about where they are. And this is a reasonable, realistic proposal, the numbers of which have been agreed to by the government. Now, my sales tax differs from his sales tax in the sense that I don't rely entirely on retailers to pay the sales tax. I have some withholding of the sales tax by others, and I have some information reporting of the sales tax by others, but that's just for compliance. So we agree that the way to free most Americans from paying income taxes is by enacting some form of sales tax. Now, the other thing about the fair tax proposal that I have some difficulty with is the prebate. As Neal said, this is a check that the government writes to families. Now, of course, you've got to decide what the family is, who the family is. There's a lot of information the government has to collect. So the government is going to be in your life if you want to get this check, knowing what it is. It may not be the IRS because the cover of the book says no more IRS. It may be the IBS or the ICS or the IDS, but somebody's got to know before the government starts writing out these checks. And the amount of checks are huge. It's $600 billion of checks. It's the biggest entitlement program in the federal government by far. It's more expensive than Social Security, Medicare, or Medicaid. It's an idea that George McGovern suggested in his 1972 campaign. He called it a demogrant. Well, they call it a prebate. But it's the same thing. It's money to every family People become dependent on getting their monthly checks. Where's my monthly check from the government? Let's increase it a bit for this or that. What if I need it for education or child care or something else? Congress, I'm running out of time, Congress will have difficulty resisting this. Let me say this. Let me say one or two more words in conclusion. We'll give Neal back his time. The proposal that I have advanced is consistent with practices around the world. It will make the U.S. a very favorable place for trade and investment, as would this other proposal if it were true. It will encourage savings and investment in the United States. It eliminates all marriage penalties in the system, and it's realistic. The President's panel and the Treasury Department estimated that the sales tax rate required to eliminate just the income tax, not the income tax and the payroll tax and the corporate and the estate and gift tax, just the income tax, is 34%, not the 30% that the fair tax folks are advocating. And if you used the rate, the base, the sales tax base, there's just one more point. If you use the sales tax base, that is the average used throughout the states, you see, the reason people like a sales tax, including me, is it's familiar to people. The states have it. But the states have a much smaller tax base than does the fair tax, something that we'll talk about later, I'm sure. The Treasury and the President's panel, and the President's panel is not a bunch of left-wing nuts. It's Connie Mack of Florida and John Breaux and Bill Frenzel, all Republicans, or in Breaux's case, near Republicans, and the President's now chairman of the Council of Economic Advisors. They said you need a 64% rate if you use the sales tax base as we know it, just to eliminate the income tax. So the fair tax for me is a wonderful idea. It's a lot like Santa Claus. I just wish I could believe in it.
Okay.
Okay, now I got to talk fast. Got to talk fast. First of all, 30%, 23%. The fair tax replaces the income tax. Income taxes are quoted on an inclusive basis, not exclusive. You're in a 25% tax bracket, you make $100,000, you pay $25,000 in taxes. Okay, 25%. But what does that leave you? 75%. If you work those same numbers on an exclusive basis, then your income tax rate would be quoted at 33%, not 25%. The reason we quote it inclusively is because we're quoting it the same way we quote the tax we are replacing. By the way, a state sales tax of 6% quoted on an inclusive basis, I don't know, 2.5%, 2.4%. That last figure he gave you was a real barn burner there, that the government says it would have to be 64% on the sales tax base as we know it right now. Well, what's the sales tax base as we know it now? It's full of exclusions. Exclusions for medicine in some states, and exclusions for food, exclusions for so many things. There are no exclusions under the fair tax. You pay the fair tax on everything. And that is taken care of by the prebate. The Commerce Department has the poverty statistics. They know what a family household of 5 or 4 or just one has to pay every month in order to have the basic necessities of life. You do not pay sales tax on that because you get the prebate. For a single person, by the way, that prebate would be about $174 a month. Think about this. Think about this. You're not paying any Social Security taxes, you're not paying any Medicare taxes, and you're getting $174 bucks a month credited to an account, debit card, whatever, from the federal government to cover you for the sales taxes, the fair tax, on the basic necessities of life. The professor is right. I do not like withholding. Next Monday, you walk around to some of your coworkers. How much did you have to pay in taxes this year? And here comes the dumbest statement you'll hear out of American citizens on a consistent basis from year to year to year. I didn't have to pay anything. I'm getting some back. Well, isn't that brilliant? They get a refund check from the government and they think they didn't have to pay any income taxes. Why? Because of withholding. It's hidden from them. Ask somebody how much they pay or how much they earn. The most common answer, none of your business. But if you run into somebody that does think it's your business, well, I take home about $1,200 a week. I didn't ask you what you took home. I asked you what you made. Oh, and they don't know. Why? Withholding. We speak in terms of take-home pay, and we speak in terms of what I'm getting back on tax day. We don't have a clear understanding of the cost of government. With the fair tax, every time you get a receipt, whether you're buying a car or a can of green beans, there it is. That's what you paid for your government right there. It is as plain as day. By the way, this doesn't have anything to do with tax policy, but I love the rich are getting richer thing. I have a little saying I like to run on the radio every once in a while. It makes people crazy. The rich keep getting richer because they keep doing whatever it was that made them rich. Ditto for the poor. Now, about the middle class. If you score the fair tax on a one-year basis, there are numbers that show that the middle class may take a higher tax burden than they are paying right now. But here are some charts. Here are some charts developed by the proponents of the fair tax, the people that helped to draw it up. Is $50,000 middle class, or is that poor? In New York, that's poor. On Manhattan, you can't exist. But $50,000, middle age 45, your current tax hit federally 22.4%, fair tax 23%. Remember, we're quoting inclusive versus inclusive. Tell me, if you're middle class, how does this sound tough to you? You don't pay Social Security taxes. You don't pay Medicare taxes. You get a check every month from anywhere from $174 if you're single, $500 if you have a large family, to cover the retail sales taxes that you'll be paying that month. You can save with no tax consequences. You can spend money on education with no tax consequences. Every dollar you put into a savings account under your mattress, every dollar you give to your kids, every dollar you leave in your checking account, not taxed. Why is that such a rough deal for the middle class? And as for the poor, the fair tax plan is the only tax plan out there that I've seen that completely, absolutely, from front to back, lifts the federal tax burden off the poor in this country and gives them a chance to maybe, who knows, invest in education if they have all the CDs they want, invest in some education and get out there and make something out of themselves. This still is the land of opportunity, and when you let people have more control over the money they earn, they might be able to take advantage of it. Did I go over that time again?
Not quite.
You see, it's the radio training, folks. It's finally coming into play.
Okay, yeah, thank you.
Okay, now it's turning into a debate. Every dollar in your checking account, it's not taxed. Not true. As I tell my students, don't read the book, read the statute. Section 801A3 of the book talks about imputed income from checking accounts. If your checking account is paying you less than the federal government rate, it's taxed. The difference is taxed. They call it a payment for financial services, and so it's a sales tax, but it's taxed. Your home mortgage interest, if it's higher than the federal rate, is taxed because they call that a financial service, and it's taxed. The problem with the fair tax is that the base is unrealistic. The base is 84% of GDP. It's 120% of consumption. So it's a lot more than consumption. Well, where did the 120% come from? Well, the extra came from taxing some of these financial checking accounts and debt and stuff like that. It also came from taxing state and local government employees and federal employees whose wages are taxed. So for So if you're in the military working for the U.S. government at some camp around here, you don't get the payroll tax cut. There's a 23% tax on your payroll, and there's a sales tax of 30%. I like to call it 30%. He likes to call it 23. We're just going to stick with that. It's the same number. There's a sales tax of 30% on everything you buy. So your payroll taxes don't go down. There are 20 million people in the employ of the state and local governments and the employ of the federal government, including soldiers fighting for our safety, who are going to pay double taxes under this tax. And you can call it a premade and you can laugh it off, but it's the federal government writing more checks than it's ever written in the history of the United States. And this is a bad thing. I would have thought that libertarians would have thought it was a bad thing to start a check writing process. This is a bad thing. Now let me say one other thing. So the base is entirely unrealistic. Other states, other nations that have sales types taxes, they get 50%, 40% of GDP. He gets 84% of GDP. So of course, 84%, you can do it at a 30% rate. If you get 42%, you get half of that, it takes a 60% rate. So it depends on what's in the base. It depends on what's being taxed. And it's a lot more sales tax, a lot more 30% on a lot more transactions than any of you have ever experienced in any state sales tax. So don't let them fool you about the size of the base. Now there's one other thing I have to say if I've got another minute, and that is this business about it's all a free lunch. Prices don't go up. You have a sales tax, prices don't go up, and wages don't go down. And the fair tax book, I brought the book because I just want to read. It's going to take 2 minutes, but I'm happy to give it back to you because I'm reading from you. So this should count as your 2 minutes. It says...
I'll sign it for you.
I'd be delighted. I can't wait to see what you're going to say after this is over. It says, if you're looking for the scholarly proposition, scholarly support for the proposition, prices will fall once embedded taxes are removed, check with Dale Jorgensen. And he goes on about Dale Jorgensen saying what he said. And then he says, you also, once the fair tax takes effect, you'll be receiving 100% of every paycheck with no withholding of federal income taxes, Social Security taxes, or Medicare taxes. You'll be paying the same price for a T-shirt. So wages won't fall and prices won't go up. Okay. So I wrote Dale Jorgensen an email last night. Here's what it said. Dale, I'm confused about some of the claims made and attributed to you by some of the fair tax, national sales tax advocates. They frequently cite you for the proposition that current taxes embedded in prices are about 22% of the price. At the same time, they claim that with a national sales tax replacing income and payroll taxes, people will take home pay equal to their before-tax wage, so wages won't go down. I don't see, I said, how both of these things can be true. Either prices will rise or wages will go down. Both ends of a seesaw can't be up at the same time. I've tried to find the paper they cite. Can you help me? Any help would be appreciated. This is dated this morning. Dear Michael, I agree with you. I am responsible only for the part about taxes embedded in current prices. So somebody else is responsible. A different economist is responsible for the assumption about wages. And sure enough, it's Larry Kotlikoff. It's Larry Kotlikoff writing for the National Bureau of Economic Research, and he says wages won't go down. But he says prices will go up 30%. So he assumes prices will go up 30% and wages won't go down. Jorgensen assumes wages will go down and therefore prices won't go up. One of these is true, but not both of them. So, it's a good story. And as I say, I actually prefer having a sales tax rather than income taxes. I think for 150 million people at least, we ought to make April 15th just another spring day.
Amen.
Gentlemen, thank you both for some very interesting perspectives on this. Neal, I think if I can have your attention, we would like you to respond to what the argument just put forward here about.
Oh, on the wages?
Yeah, maybe prices and wages will move.
Okay. When we talk about revenue. By the way, the fair tax book comes out in paperback on May the 2nd. And I say that because there's about 5,000 extra words in the paperback version of the fair tax book and some clarifications in the main body of the book. And one of the clarifications needs to be made about this keeping 100% of your paycheck thing. And Professor Gratz is right in some respects. And that is that when you are working for somebody and they are withholding taxes, those taxes that they withhold from your paycheck, they become part of the embedded taxes in whatever product or good or services they are sending out into the marketplace. Now, so what that addresses, or what that leads us to, is essentially a revenue neutrality. A better way to phrase it, and I think this is the way we phrase it in the softcover edition of the book, is under the fair tax, the wage earners, they're taking home the same amount of money they were before. The government, the same amount of money it was before, and prices are remaining essentially the same. Okay? Nobody is walking away with any gift or any present of extra cash all of a sudden in their bank account or under their pillow from the cash fairy under the fair tax. It is simply a way of taking the reality that exists right now, and that is all taxes are eventually found embedded in the price of the goods and services that we buy on the marketplace, and clarifying this and making the tax code simpler and easier to understand for everybody out there. Making April 15th a spring day for you, where you can get out on the streets of Manhattan and dodge yellow trucks and cars, making a spring day for people like me in Atlanta, where we can fight off the pollen 48 hours a day. Now, for somebody, well, I don't want to get too far afield here, but for somebody that changes jobs or gets a new job after the implementation of the fair tax, they truly are in a 100% of your paycheck category. Whatever pay they negotiate, that's what they get on payday. Now, I need to be briefed by you on these soldiers paying double taxes. I mean, I've been talking...
I can show you the statute.
Yeah, I have been...
I've read the statute.
I have been talking about the fair tax and on tour with this book for about 8 months now. That is the same, the first I've ever heard that, so I'll address it at some point. As to the government writing all these prebate checks, we write 42 billion checks a month anyway. Social Security, it's a mouse click, folks. Now, and that's not that difficult for the government to do. Well, let me withdraw that. Maybe it will. Maybe at the same time we implement the fair tax, we could actually get some competency in government. Wouldn't that be a concept?
Let me raise...
Can I just say something about this wage? I'll be brief. So I just want to be clear about what he just said. What he said is that if you're now making $10 an hour and $3 of that is in taxes, the fair tax people say you're going to be making $7 an hour when the tax goes into effect. That's what he just said.
No.
Yeah, you said.
No, let me...
your after-tax pay is going to be the same. And so your after-tax pay is $7. And so it's going down.
Maybe
if your wages go down or prices go up, one or the two has to happen.
First of all, this will be up to negotiations between you and your employer. Your employer could elect to let you have that, to return that money to you and raise your take-home pay by $3.
Yeah,
but
if he does that, he's got to charge it to the consumer.
In which case, it does not come out of the price component.
Right, so
I understand.
Prices go up.
But what we're saying, and I think a more fair way to say this, if you're taking home, if you're hourly at $10 an hour, and you're taking home $7 an hour before the fair tax, you will take home a minimum of $7 an hour after the fair tax, plus you will not be paying taxes on any money. You'll be able to invest and earn interest tax-free. You'll be able to buy a home and earn appreciation on that home tax-free. and so on down the list. It is revenue neutral.
Let me raise a question about other taxes in this country. The state and local governments and county governments around this country depend on a combination of sales taxes, property taxes, and income taxes. What, if anything, do these fair taxes, national sales taxes say about what state and local governments can do going forward?
Strictly federal tax reform. It is not state tax reform. However, many states index their state income tax to the amount you owe in federal income taxes. They're going to have to do something to change their tax structure. At that point, that'll be up to the various states. Let them compete on that issue. It is the feeling of the fair tax people that many of these states will elect to emulate the fair tax by changing their exclusive sales tax to an inclusive one and fund the operations of state government that way.
This is a very important point, because not only does the fair tax not do anything in terms of helping the states organize their tax systems, but it also taxes the state and local governments on every purchase they make, whether they're buying cement to build roads, and on the wages they pay to their employees. So they're getting no relief from the payroll tax because it's 23% under this bill, and they're having to pay taxes on all of their purchases. This is why the base is so large, because it includes in the base not only what private individuals spend, but also what state and local governments spend. So where is that money coming from? Out of the state budgets. It's coming from higher taxes. I want to go back to what you said. You know, ultimately people pay taxes, and they're going to have to pay these taxes that are an additional tax on state and local governments. And it's in the bill. It's in the base. This is how they get to 84% of GDP, and no one else does. And not only that, the president's panel said that in our federalist system, it's inappropriate for the federal government to tax the state and local governments. And I say, not just inappropriate, constitutionally questionable.
Yeah, it's inappropriate for the federal government to tax state and local governments. It's just totally appropriate for them to tax the people of the states and then withhold that money from the state governments until the state governments comply with federal edicts. But let me say this about state and local governments paying the fair tax. Everybody gets treated equally under the fair tax. Everybody pays the tax. You give the state and local governments an exemption from paying the tax, and all of a sudden they have a great incentive to enter into more and more and more competition with private industry and private businesses in their states. We're not supposed to be in a business of having government compete with private industry, and the fair tax applied across the board would be a disincentive for that.
I just need to say one thing about this fact. What the state and local governments will pay under this is an additional tax that other businesses don't pay, and that other organizations other than the federal government don't pay, of 23% of their payroll. And this means that if you're an employee, if you're a state and local government and you're deciding whether to hire an employee to build this road or whether to contract it out to a private business, you can contract it out to the private business and avoid this tax, or you can have your employees and pay this tax. So it's a double tax, and it's in the bill, and it's in the base. And you remove it from the base, and the rate has to go up. And and the federal government is in the bill. The bill also, this is the biggest mystery, maybe you can explain this one to me. So the bill also taxes the federal government on its payroll and on its purchases of its road building or its Humvees or whatever military equipment it's buying. It now has to pay the sales tax because private businesses would have to for those very reasons. Well, this is a mystery to me. This is like taking it out of one pocket and putting it into another pocket. I've got a little bottle in my closet, and I put my quarters and stuff in it, right? So I tax myself my change, and I put it in the container. Well, either this amounts to nothing, in which case it shouldn't be counted as part of the base, or it's an extra burden on federal governments, which they have to make up by paying this amount by cutting spending somewhere else. Now, you know, it may well be a good idea for the federal government and state and local governments to cut spending. I'm not arguing that it's not, but you can't bury it in a tax bill and not tell anybody about it.
Well, it's not buried in the tax bill, and we're not telling people about it. On the course, since this is a federal tax, he's absolutely right. Concede the point. The federal government will pay the tax at the retail level like everybody else. But then what happens? It goes right back to the federal government. So instead of creating exclusions and the paperwork and the bureaucracy that has to go with that, the federal government just plays the game with everybody else, and in that sense, it is truly a revenue-neutral event.
But you're counting that money as tax revenue in order to get to your 30% rate.
Let me raise another question. You've talked in terms of the U.S.
23%.
You've left out, in a sense, the rest of the world. Now, any Saturday morning here, you can be knocked over by the traffic fleeing New York for New Jersey, where the sales tax is lower.
Yeah.
Is there, on a national level, if the sales tax, value-added tax is this high, are we going to be instead knocked over on the highways from Buffalo and such to Canada as people are buying things cheaper over there? Or in this era of the Internet, where many of us are arbitraging local taxes by buying things mail order from another state, what does that say about the ability to collect taxes under this mechanism?
Well, under the fair tax, internet sales are taxed. Okay, why should the internet merchant receive a benefit that the person who is actually invested in the local community, or what a benefit that they don't? Internet sales tax. Also under the fair tax, you go overseas to buy Cuban cigars in Toronto, which I'm sure some people in this room have done, or a yacht in France or whatever. You bring it back into this country, just as you do now. You will be responsible for paying the sales tax. I buy an automobile in Georgia and have it delivered to me at my home in Florida. I don't have to pay the Georgia sales tax because I bought it in Georgia. But when I register that automobile, bring it into the state of Florida, I pay the sales tax down there. It'll be the same thing for people who try to go across the borders and go overseas to buy items to avoid the fair tax. They pay the tax when those things are brought back into this country.
In theory.
Who's going to collect this
I was going
tax?
to say, in theory,
The same
they
people
do.
that collect the customs duties on the things that you bring into this country now.